What if the single most consequential financial decision you make in your 20s isn't your apartment, or your student loans, or even your first job, but the car sitting in your driveway? Most people treat their first car like an afterthought, a checkbox, something to just get done. But the best starter cars aren't just about getting from point A to point B. They quietly shape how much money you have left at the end of every single month, for years. Think about it. You're 18, maybe 22. You've got a budget, a dream, and zero experience navigating dealer lots, financing terms, or insurance quotes. And somehow, in the middle of all that noise, you're supposed to pick a car that won't financially wreck you before your life even really starts. That's a lot of pressure, and almost nobody talks about what actually happens when you get it wrong. Let's rewind. The concept of the starter car really solidified in post-war America, the 1950s and 60s, when car ownership exploded from a luxury to a near necessity. Young workers needed wheels to get to factories, offices, suburban homes. The auto industry responded by flooding the market with cheap, basic transportation. But cheap didn't mean smart. And the habits formed in that era, buy big, buy flashy, worry about the costs later, they never really went away. Fast forward to today. The average new car in America costs over $48,000. Let that sink in. The average. That means millions of first-time buyers are walking into a market where the typical purchase is nearly $50,000, financed over 6 or 7 years at interest rates that can push total cost well past 60 grand for a starter car. That's not a vehicle. That's a financial anchor. And here's what nobody in the showroom will tell you. The sticker price is maybe 60% of the actual cost of owning a car. The rest? Insurance, fuel, maintenance, registration, depreciation, which is the silent killer. A new car loses roughly 20% of its value the moment you drive it off the lot. In the first year alone, some vehicles lose $8,000 to $10,000 in value. That's money you paid that simply evaporates. So what does a smart first car actually look like? Let's break down the 4 costs that will make or break your ownership experience. Purchase price, insurance, fuel economy, and maintenance, reliability. These 4 levers, pull them right, and your first car becomes an asset. Pull them wrong, and you're working 2 weekends a month just to keep a depreciating machine on the road. Let's start with the car that practically invented the category, the Toyota Corolla. First introduced in 1966, the Corolla is now the best-selling car in human history. Over 50 million units sold across 12 generations. And it didn't earn that title by accident. The Corolla's secret has always been its almost boring dependability. Mechanics call it the car that refuses to die. Owners regularly report driving them past 200,000, even 300,000 miles with basic maintenance. The numbers back this up. According to IC Cars data, the Toyota Corolla consistently ranks among the top 5 vehicles most likely to reach 200,000 miles. Its average annual maintenance cost sits around $362, compared to the industry average of over $600. And because it's so common, parts are cheap, and every mechanic on Earth knows how to fix one. For a first-time driver, that's not just convenient. That's financial protection. Then there's the Honda Civic. If the Corolla is the reliable older sibling, the Civic is the one who's just a little more exciting at the dinner table. First launched in 1972, the Civic carved out its own identity. Slightly sportier feel, more driver engagement, a dedicated enthusiast community that's kept it culturally relevant for over 50 years. It also consistently scores near the top in resale value. Buy a 3-year-old used Civic, and you'll likely sell it for nearly what you paid.
Here's where it gets interesting.
When you compare the Corolla and the Civic head-to-head against two other major contenders, the Mazda 3 and the Hyundai Elantra, the picture becomes more nuanced than most car review sites will admit. The Mazda 3 wins on driving dynamics and interior quality at its price point, hands down. The Elantra wins on upfront value and warranty coverage. Hyundai's 10-year powertrain warranty is genuinely remarkable for a starter car buyer.
But here's the thing.
Most first-time buyers completely ignore insurance. Your car choice can swing your annual insurance premium by literally thousands of dollars. A young driver in a sports-adjacent vehicle, even a used one, can pay $2,400 to $3,600 a year in insurance alone. The same driver in a Toyota Corolla or Honda Civic, often $1,200 to $1,800. That's a difference of up to $150 a month. Every month, for years. That's a vacation. That's an emergency fund. That's real money.
And this is the moment
Most people realize the best starter cars aren't the ones with the best commercials. They're the ones that survive contact with real life. Tight budgets, unexpected repairs, fender benders in parking lots, road trips with 4 people, and too much luggage. The cars that forgive your inexperience. The cars that don't punish a missed oil change with a $4,000 repair bill.
Let's talk about used versus new, because for most first-time buyers,
This is the real decision. A used car in the 2 to 4 year range hits a sweet spot that new car buyers simply cannot access. The steepest depreciation has already happened. Someone else absorbed that initial value drop. You get a nearly new vehicle at a meaningfully lower price with a remaining manufacturer warranty in many cases. The math almost always favors buying used for your first car.
there's one more thing nobody wants to say out loud.
Out at the dealership. Your first car is probably going to get dinged, scratched, maybe worse. That's not a criticism, that's just the reality of learning to navigate the world behind the wheel. Parking garages, tight streets, parallel parking in the rain at night. Buy a car you're terrified to scratch, and you will spend the next 2 years anxious every time you open the door. Buy something sensible, and you give yourself permission to just drive.
So here's the chronological truth about your first car.
Year 1. You learn to drive it, insure it, maintain it. You find out what gas costs when you actually pay for it yourself. Year 2. Something breaks. It always does. How catastrophically it breaks and how much it costs to fix will tell you everything about whether you chose well. Year 3. You start to understand what it actually means to own something, not lease it, not borrow it, own it. That's a different relationship. By the time you're ready to sell your first car, and you will sell it, or trade it, or park it forever, you'll know more about money, reliability, and your own values than almost any personal finance book could teach you. Because a car is one of the first physical assets most people own. It depreciates. It needs maintenance. It demands insurance. It rewards consistency. Sound familiar? That's just life at 50 miles per hour.
The best starter cars.
The Corollas, the Civics, the Mazda 3s, the Elantras. They're not exciting because of what they are. They're exciting because of what they make possible. Financial breathing room, freedom of movement, the quiet confidence of knowing your car won't strand you at 11 p.m. on a Tuesday. That's worth more than any badge on a hood. And the sooner you understand that, the smarter every car decision after this one gets. Your first car is a chapter, not the whole story. Choose it like someone who knows the next chapter is even bigger.